Every time the world trembles, someone gets richer. When markets collapse and millions lose their jobs, a small circle of people quietly celebrate. To most, a recession is fear, layoffs, bankruptcies, desperation. But to the wealthy, it's a ritual, a cleansing fire that burns away the weak and resets the game in their favor. In every economic downturn, fortunes don't just disappear, they transfer. From the many to the few, from panic sellers to patient buyers. It's not conspiracy, it's strategy. When prices fall, assets move. Real estate, stocks, companies, all on sale for those with cash and courage. And history shows again and again that the rich have both. The question isn't why recessions happen, it's why those who already own everything need them to. Because every boom must eventually give way to a bust. And every bust, if you know how to play it, is the birth of a new empire. From the Great Depression to 2008, from COVID to what's coming next, this is not a story of chaos. It's a cycle, a predictable rhythm. And those who understand it don't fear the crash. They wait for it. Every economy has its seasons. There are summers of growth, when optimism fills the air, and winters of contraction, when everything freezes. But recessions are not random storms. They are built into the very design of capitalism. And while most people see them as disasters, the rich see them as opportunities. During the 1930s, the Great Depression wiped out entire industries. Small businesses closed by the thousands. Families lost their homes and life savings. Yet, for a handful of people, like the Morgans, the Rockefellers, and Joseph Kennedy, it was the chance of a lifetime. They had liquidity when no one else did. As stock prices collapsed by 90%, they bought the world at a discount. By the time the recovery came, their wealth had multiplied. The Depression didn't destroy them, it consolidated their power. The same pattern repeated in 2008. As ordinary Americans panicked, losing homes and jobs, billionaires like Warren Buffett and private equity giants like Blackstone moved in. They didn't run from the fire, they bought the ashes. Foreclosed homes became rental empires, failing banks became cheap acquisitions. While fear ruled the masses, calm ruled the few. Recessions are the reset button of wealth. They expose over-leveraged dreamers, clear out reckless investors, and hand control back to those who can afford to wait. This great cleansing, as economists politely call it, is capitalism's way of pruning the tree, removing the weak so the strong can thrive. But behind this natural metaphor lies something darker, because the rich aren't just surviving recessions. Many are engineering them. By pulling capital from overheated markets, by influencing monetary policy, by shaping narratives of fear, they can turn chaos into currency. Every time liquidity dries up, those sitting on mountains of cash become gods of the new economy. To them, recessions aren't tragedies, they're harvest seasons, times when assets come cheap, labor gets desperate, and influence grows exponentially. Every crash tightens their grip, not despite the pain of others, but because of it. The average person prays for stability. The rich pray for the reset. Recessions don't just happen. They are triggered, accelerated, and monetized through one universal force: fear. Fear is the invisible hand that moves markets faster than any economic data ever could. It makes rational people act irrationally, and in that moment of chaos, wealth quietly changes hands. The Great Depression began as a simple market correction, but what made it catastrophic wasn't just falling prices, it was panic. News headlines screamed collapse, crowds gathered outside failing banks, families lined up to withdraw savings, creating the very shortages they feared. In that panic, the market lost 90% of its value. Yet when everyone else was selling, insiders were buying, often using the very media panic they helped ignite. The same script replayed in 2008. When Lehman Brothers fell, Television networks filled every hour with images of empty trading floors and collapsing charts. Fear became contagious. People dumped stocks, sold homes, and pulled cash out of mutual funds. The elite, armed with information, liquidity, and patience, waited for prices to bottom. Then, like clockwork, they bought. Within 5 years, the stock market had doubled. Those who panicked were gone. Those who stayed became richer than ever. Panic isn't a side effect of recession, it's a tool. When fear floods the system, the value of everything temporarily collapses. Assets that were untouchable a month before suddenly trade for pennies. Private equity firms call it distressed opportunity. To them, your loss is just market efficiency. But fear doesn't just destroy wealth, it reshapes power. When the public loses faith in banks, in governments, or in the currency itself, new systems rise. After every major crash, policies shift toward greater centralization. From Roosevelt's New Deal to the 2008 bailouts, recessions always end with the same bargain. The rich and powerful get to rewrite the rules in the name of stability. It's no coincidence that the same institutions that warn us of danger are often those who profit from it. Ratings agencies, central banks, and large financial media networks have learned how to turn sentiment into strategy. They don't need to cause a crash, they just need to manage the mood when it arrives. Fear is profitable because it blinds people. When the average investor runs, liquidity dies and bargains appear. The rich simply pick up what's left behind. And as long as the crowd believes that every crash is the end of the world, the few who understand the cycle will keep turning panic into profit. Every crisis begins as chaos and ends as consolidation. When the dust settles, power doesn't vanish, it concentrates. The wealthy understand this better than anyone. They don't just survive the storm, they rebuild the world in their image once it's over. The 2008 financial crisis was not just a banking collapse, it was a transfer of control. Millions lost their homes, but investment firms like Blackstone quietly became America's biggest landlords. Wall Street, whose recklessness caused the crash, received trillion-dollar lifelines from the government. The same executives who gambled with toxic assets walked away with bonuses, while the middle class sank deeper into debt. That wasn't recovery, it was a restructuring. Economist Naomi Klein once called it disaster capitalism, the exploitation of crises to impose policies and systems that would never be accepted in normal times. When people are afraid, they accept anything that promises stability, even if it means handing more power to the very institutions that failed them. History repeats the script. In the aftermath of the Great Depression, financial elites shaped the world's monetary system through Bretton Woods, a global architecture that tied every economy to the US dollar. After 2008, new regulations made too-big-to-fail banks even bigger. After COVID-19, trillion-dollar stimulus packages flowed not to small businesses, but to asset markets, inflating the wealth of those who already owned the most. Crisis capitalism feeds on collapse. Each downturn becomes a chance to erase competitors, buy influence, and expand control. The same system that claims to punish greed ends up protecting it. Recessions serve as convenient resets, moments when democracy goes quiet and economics becomes destiny. For ordinary people, the story is one of survival. But for the powerful, it's about opportunity. An opportunity to rewrite laws, buy companies, and reshape entire industries. The weaker the public becomes, the more room there is to build monopolies, manipulate markets, and redefine normal. In the end, recessions don't just make the rich richer, they make them stronger. Each crisis tightens their hold on governments, media, and finance. It's not about money anymore, it's about control. Because when you control the aftermath of a collapse, you control the future that follows. Every financial empire is built on one thing: timing. But timing isn't luck. It's liquidity. It's the power to wait when others can't. The rich don't pray for recessions because they enjoy suffering. They pray for them because they know that panic drains cash from everyone else. And in that void, those who hold liquidity become kings. When markets crash, most people scramble to survive. They sell assets to pay bills, liquidate savings, and downsize to stay afloat. But the wealthy, whether individuals, families, or funds, do the opposite. They hoard cash during the booms, biding their time. When the crash comes, they strike. Their secret isn't prediction, it's preparation. J.P. Morgan's strategy during the 1907 panic set the template. As the banking system froze, Morgan personally decided which banks to save and which to let fail. By injecting his own capital into select firms, he stabilized the market and, in return, consolidated enormous influence. He didn't end the panic out of charity. He bought the future of American finance at a discount. The same principle applied in 2008. Warren Buffett's Berkshire Hathaway made billion-dollar deals with Goldman Sachs and General Electric, companies desperate for cash and credibility. In exchange, Buffett secured preferred shares, dividends, and warrants that later earned him billions. To the public, he was saving capitalism. In truth, he was monetizing fear through patience. Liquidity is not just money in the bank, it's optionality. It means you can wait while others rush. It means you decide when to enter, what to buy, and how much to risk. Most investors don't lose because they're wrong. They lose because they run out of time. The rich have time on their side, and they've built systems that guarantee it. Central banks understand this too. Every interest rate cut, every bailout, every emergency lending program eventually funnels liquidity upward. When the Federal Reserve opens its floodgates, the first recipients are not ordinary citizens, but institutions, the very players best positioned to buy assets before prices rebound. This is how the cycle reinforces itself. Liquidity creates power, power creates access, and access creates more liquidity. It's a game where patience is rewarded and panic is punished. By the time the recovery begins, the bottom has already been bought. The wealth gap widens not because the poor failed to work hard, but because the rich were waiting when the world stopped working. And every time the cycle resets, fewer players remain in the game. Recessions aren't the failures of capitalism. They are its maintenance system, the purge that keeps the engine running. Without collapse, bubbles would never burst, and without bursting, the illusion of value would never reset. Every so often, the global economy needs to destroy itself just enough to begin again. And those who understand this cycle don't fear it, they fund it. Each boom plants the seeds of its own destruction. Easy credit inflates prices, confidence breeds speculation, and eventually the system overextends. The crash isn't an accident, it's the cure. Debt gets liquidated, weak firms vanish, and capital concentrates in stronger hands. The same names, the same banks, funds, and families emerge from the rubble wealthier than before. Governments call it stabilization. Economists call it creative destruction, but in truth, it's a controlled burn, a managed chaos that cleans the slate while keeping the hierarchy intact. Every bailout, every rescue package, every stimulus check is a bandage on the same wound, a wound designed never to fully heal. The Federal Reserve, the European Central Bank, the IMF all exist to manage these cycles. Their role is not to prevent pain, but to schedule it, to make sure recessions don't happen too often, but just often enough to discipline the system, Too much growth without collapse, and inflation spirals. Too much collapse without growth, and the system dies. It's a delicate rhythm, destruction followed by salvation, that keeps capital flowing upward. In the end, recessions serve two purposes: to reset markets and to remind the public who really owns them. Each downturn reinforces dependence on credit, on government, on those with capital. The middle class learns to fear the crash, while the elite learns to master it. The poor lose assets, the rich acquire them. The cycle repeats, and every recovery begins with fewer winners and more spectators. That's why the rich pray for recessions, not out of cruelty, but out of necessity. Because in a world where debt fuels growth and speculation drives wealth, collapse isn't the end of the game. It's the moment it becomes profitable again. As long as money is created through debt and debt demands repayment, recessions will remain the Great Reset, the invisible design that keeps power where it has always been. And every time the world falls apart, you can be sure of one thing. Somewhere, someone is quietly waiting for the crash, ready to buy it all over again.